Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at US oil, looking at the WTI, West Texas Intermediate, and I haven't covered oil for a few months on the channel. It wasn't very popular when I did last cover it, and I do believe in giving people what they want. Rather than asking them to watch something they're not particularly interested in. But I'm going to give it another whirl since there has been a couple of requests, and if this video picks up the views and does pick up the interest, then I can probably bring oil back into circulation of the coverage. But if it turns out to be a bit lackluster, I'd rather people get to see something that they actually want to see. So we'll give it a whirl and see how it goes. So following our new format, we'll be starting with our Elliott wave count first and finishing with our basic technical analysis. So let's just get on with it. We're here on the day time frame in the arithmetic scale, and we're looking at what I think is a top on primary degree with a correction currently underway. So let me just explain what I mean by that. We've essentially, from the April low, where we basically hit zero in 2020, we've been working on a new bull market that I think we've completed cycle wave 1 and cycle wave 2. I believe we're in cycle wave 3, and I believe we're completing the primary wave 1 of that cycle wave. So we could be looking at extension in the wave 1 rather than the wave 3, but we won't know until we see this correction complete and how the wave structure starts to build. An extension in the wave 3 is still possible. Since we're coming from zero, we can expect probably to see some pretty extreme Fibonacci relationships for that wave 3, 1.618, 2.618 or 3.618. But either way, in the meantime, we've come up into all this prior noise here, which is this B wave correction before we collapsed down into that April low. This was during 2019, and we can see that on the volume profile here, the extreme of which is marked by a point of control, which is right through the middle of all this noise on the daily time frame, with all the extreme buy sell volume around this peak. We are currently trading above the point of control, but we are in amongst all this noise. And if we look at these two highs here, the high around the 24th of April 2019 and the high around the 8th of Jan 2020, we can see we've basically got a double top here, marking the highest point from this peak, moving it across on this white line. We can see that we've basically stopped right in the same place and started to sell off. Now, another thing we can look at, if we just zoom in a bit, to why I think this is a potential high here. So I'm just going to pull up a modified pitchfork. Well, I've got a shift pitchfork, and we've come up to our cyclical 1, I'm saying cyclical 2, and then we've traded in the lower channel of this pitchfork very neatly, bouncing between the 38.2 and 61 extensions several times, ranging through here. Then we make a rush on the median line. We've tagged that median line, we wick through that line of resistance where we've got that white line, but we body the candle below it. We come back up to test it and then sell off. So this is major resistance up here. It doesn't matter how you cut it. You've got the median line here, you've got that long-term resistance here. So we've sold off all the way to the outer edge of the pitchfork, and we've been tagging along there for a little while, but it does look like we're about to break the fork, move down to complete primary wave degree wave 2, at which point, once it's complete, we would take the bottom of cycle wave 2 up to the top of primary 1, down to primary 2, and set up a new pitchfork and a new piece of geometry for the market to start moving up in the free of a free. So even though we'd be falling out of this initial pitchfork, we should see acceleration up in the free of the free if this count is correct. So let's just move that pitchfork out of the way for the moment. And is there anything else I wanted to check? Yes, now, one of the things you could argue, since we came to the median line on the pitchfork, that's a typical target for a wave 3 of whatever wave degree you've placed the swing high, swing low on, which we chose cycle 1, cycle 2 here. So you could argue this is 3 and this is 4 and 5's to come. Now, the reason I don't like that is if we measure that proportion wave extension of the 1 projected from the 2, we find that we only make it to the 78.6. Now we make it to the tick, literally to the tick of the 78.6, and then roll over. That's a pretty short wave 3 that isn't even achieving parity with the wave 1. So this is why I think it's all just one primary wave in what's going to be a mega wave 3. A huge wave 3, because it's far too early at 78.6 to call a cycle wave degree 3, I think, in a new cyclical bull market which began at 0. I could be wrong, but that's just my feeling. I think we're going to see astronomical oil pricing to come. So in the coming years, so this would fit the idea that this isn't big enough. We should be looking at least 1618. Maybe we should be looking at 2618, maybe 3618 before we even think about finding the cycle wave 3. Because of this, if this is primary wave 1, 2, then the 3 of the 3 should be gigantic. So enough of that. Let's look at the move since the recent high. So we've come up in 5 intermediate waves into our primary wave 1. Let's look at the... Oh, I'm not zooming in. I'm just putting a big red box around things. So let's zoom in and see what we can see here. We're going to come out down to the hourly time frame and have a look at the chart. So let's just zoom out a bit. Since peaking around this high, tagging that 78.6% extension of the wave 1, hitting this prior resistance, wicking through it, closing down below it on the daily time frame, and hitting the median line, we do appear to have come down in 1, 2, 3, 4, 5 waves. You could perhaps count it as an A, B, C. I think the C would be a little too long to call that a flat. This looks more like 5 waves down, so I think the overall structure is going to be a 5, 3, 5 zigzag. Quite a deep retracement on the zigzag, but we don't know whether we're looking at just an A into a B or a 1 into a 2 in a much more severe correction. I'm going to give it the benefit of the doubt that it is just a zigzag going down into an A, then up into a B. If we look at what we retraced from the top, assuming our B's in, we came straight into the yellow zone, 61.8, 65 to the tick, right here. Nothing on the volume profile screaming that this would be the likely place to stop, but it is a strong Fibonacci destination. We always look for 3 moves back into the golden zone, 3 moves back into the yellow zone here, whatever you want to call it, the 61.8, and now we appear to be selling off again. We seem to have a little 5 wave move in here into a 1. We seem to be working on a 3 wave move, maybe a little bit higher, and then we're going to come down to 3, 4, 5 and get moving lower. That's essentially how I see the Elliott wave count at the moment. If we would come back above this high at 76.902, then I'd have to reconsider the correction already over. Perhaps this was some kind of zigzag, and then this is a 1, 2, 1, 2, and off we go into a 3. I'd have to look at this as an ABC to complete the whole thing. At the moment though, when I look at the structure from the A here, we have what seems to be 3 waves here, what seems to be 3 waves here, and what seems to be potentially 5 waves here. So that looks like a flat to me, ABC going back up. You could count it as 3, 3, 5 and say this is an ABC and have it WXY, but I'm happy with an ABC here. We do seem to have an impulse down here in a minor 1. We do seem to be working on 3 waves into a minor 2. So everything currently says to me we're heading lower, and that seems to be the case. So I'm going to leave the Elliott wave count there. We're looking for 3 waves down into a primary wave 2, looking for roughly between 50 and 61.8% the retracement. Oops, a daisy. Let's bring that back. 50 and 61.8% the retracement of the wave 1, which would bring us roughly down into the high 40s, low 50s. For the WTI. Okay, so let's get rid of our Elliott wave count now. Go out to the weekly time frame, since this is one of the long-term counts I actually still have recorded, and we're going to just focus on more recent price activity over the last year or so, and then bring up our moving averages. So we've got a 10 in yellow, 20 in blue, 60 in orange, and 250 in green. We're going to bring up our MACD and our RSI as well. I've already told you about the volume profile. The MACD has a short-term moving average in 10 in blue and a long-term moving average in orange, which is a 20 and a 9 to smooth. We also have our RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. So the first thing I would point out, from the point of view of basic technical analysis, is from our low to our high, straight into this previous noise, into all this high volume, into this major point of resistance and that pitchfork median line of blah blah blah. It's all we've done is basically gone from oversold to overbought. You know, this does feel just like a swing low, swing high in itself, and we've basically confirmed that in momentum on the RSI. So having reached overbought conditions, we have completed something significant up here, and therefore a sustained pullback back into at least neutral territory, not necessarily all the way back to oversold, but down into neutral territory would make sense as we continue the cycle wave degree higher once we complete this primary wave correction. So Now, if we look at where we are regarding the MACD as well, we have had a bearish crossover, short term over the long term, and both now rolling over and trending downwards. Both the orange and blue moving averages both heading lower. No signs of an extreme sell-off yet, given the momentum of this rather sideways movement on the weekly time frame. But if we are going to break down in the last part of a zigzag into a C, we should see an acceleration in that momentum in the next couple of weeks, and then we should be looking for a bottom. But that's yet to really confirm this. If this doesn't show any form of acceleration, or we complete before where I'm projecting, then maybe we need to consider this count not complete yet, and this could be maybe a wave 3 into a wave 4 rather than a wave 1 into a wave 2. We expect to see a deeper retracement in a wave 2. Not always, but we expect to see it. But we do have that bearish crossover, we do have a building bearish momentum. The histogram bars are growing, we just haven't seen a breakaway move yet. Same with the RSI. So let's come down to, I should mention, of course, we're still above the 10, 20, 250 and 60 exponential moving averages here, actually hugging the 10 at the moment, which has proven to be pretty strong support on the weekly time frame. If we just come in and have a look here, we can see how we spent some time wicking through the 10, back, wicking through the 10, back, wicking through the 10, back, got one body below it here, and then spent the next week going above, wick to it again, wick to it again. So it's very strong support at the moment on the weekly time frame, but I suspect that when it breaks, there's very little in the volume profile here, some big gulfs. We should move down quite aggressively quite quickly, which would give us that acceleration on the histogram here on the MACD and the breakdown into neutral territory on the RSI. So I do think we are likely heading lower. On the daily time frame, we are still above the 10, 20, 60 and 250. We can see how, as I often point out, depending on how close the moving averages are intertwining, we can see how the 20 but often the 10 exponential weekly averages coincide with the 60 exponential moving average on the daily time frame, trading all around this peak in the volume profile here, testing the 60 exponential moving average, bodying below it, bodying well above it, wicking through it, bodying above it, wicking through it, wicking through it, and just essentially this is our resistance, our support, on the daily time frame from a basic analysis point of view. Now, we can see that the recent crossover in the MACD, we've gone from up here at around 2.1 here on the MACD, come back through the zero bound, and as we've moved back up into bullish momentum, it's died off rather quickly and is flatlining as the darker green bars appear on the histogram. This does not look like a blast off into an impulse wave. It looks like we've had an initial move down with quite strong bearish momentum from these highs here, and then we're just having a corrective bullish phase before going lower again. That's how I interpret it, that's how it looks. If we see this roll over this week, short term over the long, and we see more red bars building, that would support the idea that we are a wave 1, wave 2, 3, 4, 5 to come into that wave C. RSI's basically drifted higher, didn't quite make it to oversold with that initial move down, drifted into the neutral zone, into what looks corrective. Momentum supports corrective price activity. We have an initial move down and back up. We see that supported price. There's no bullish divergence here, so we should expect to see a flush down into oversold. I think that initial A wave did not get us there. The C should get us down into oversold if this count is correct, and that's how I see the basic analysis. So we'll wrap it up there, guys. So if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And I'd like to thank all my patrons before leaving as well. If you're interested in becoming a patron, please follow the link in the description box below. Have a read of the tiers, see if you're interested. I will ask you, however, if you can, consider leaving it until the 1st of the month so you avoid getting charged for the previous month and the 1st of the next month as well. But if you're interested, please head over and have a look. Also, you can follow me on Twitter. I have a link in the description box below to my Twitter feed as well. I always announce videos the day before they're put up, so you know they're coming. And that's it, guys. Take care of yourselves, and I'll be back with you later. All the best. Bye-bye.